Bitcoin. Some say this is the hedge against, well, everything.
This is the national debt clock. It's been in New York since the late 80s, and it shows the gross national debt that we as a nation owe countries, companies, and people that lent us money, almost exclusively in the form of bonds. Back in 1989, it was just shy of $3 trillion. Today, it's north of $30 trillion. And if you look at it by household, there's a reality check, more than $300,000 owed per household. Many worry that a confluence of factors is going to send the U.S. into a debt spiral.
So is Bitcoin the hedge against America's looming debt spiral?
The U.S. routinely is spending more than the country and the government is taking in. So we are living beyond our means.
As of this year, the U.S. is already spending more on the interest of its debt than on national defense. And that's not because military spending is decreasing. The reason is because servicing that debt has become so expensive.
As it stands today, the U.S. Treasury Department spends $1.8 billion to pay the interest on our existing debt. By 2033, that number will be closer to $4 billion. The money that we pay every single day to finance our deficit cannot be spent on roads, bridges, or infrastructure, or our children's future. It is just being spent to finance our deficit.
So how did the U.S. get here? For 2 decades after the clock first appeared, the national debt was considered manageable. But that all changed in the wake of the 2008 financial crisis, when 2 things happened. The U.S. economy shrank and borrowing increased.
Our economy plunged, and we had a lot of deficit spending to try to revive it.
And that's when the current trajectory really grabbed a hold of the country.
By 2013, the continued slow growth, even though it had picked up, and the rising debt put it above 100% for the first time ever. So our debt was above the size of our economy.
This comparison is known as the debt to GDP ratio, and it's often used by economists to gauge the fiscal health of a nation.
Even though that was a high level, it pretty much stayed flat for about a decade.
That is, until everything changed.
Bitcoin's next halving is expected to take place on April 25th, 2024. This is one of the most important catalysts ever happening for Bitcoin and could be the biggest one we've ever seen. Some predicting moves up to 100K, and some even predicting a multi-year bull cycle. Now, you may have heard of Joe Rogan. We're going to talk about his take on Bitcoin a little bit later. But basically, I started to add more and more Bitcoin to my crypto portfolio. If you follow along with what I do, I trade the stock market. I haven't been big into crypto, but I've been educated on an incoming catalyst for Bitcoin that we don't get too often, so you don't want to miss it. In fact, not only is this catalyst here, but Bitcoin could be the main hedge against very dangerous waters coming to our economy. So you want to pay attention to what this catalyst is and Joe Rogan's take of how Bitcoin is likely to be the world's universal currency. The last time Bitcoin had a halving catalyst was on May 11th of 2020, just about 4 years ago, and the final halving is expected to occur in 2140 when the number of Bitcoins circulating will reach the maximum supply of 21 million. A Bitcoin halving event occurs when the reward for mining Bitcoin transactions is cut in half. Halvings reduce the rate at which new coins are created and thus lower the available amount of new supply, or better explained by Crypto Casey in this video.
Another historically bullish event for Bitcoin is on track to happen in early 2024, the next Bitcoin halving. What is Bitcoin halving? So blockchain is just a list of transactions that are batched and saved in blocks on the network. So in the Bitcoin network, after every 210,000th block of transactions is created, the amount of new Bitcoin that enters circulation as rewards for miners is cut in half. Hence the term Bitcoin halving. And since the amount of new Bitcoin entering circulation is cut in half, or halved, that means less Bitcoin will be produced. Therefore, a decrease in the supply. And if demand remains steady or increases while the increasing supply of Bitcoin is divided by half, we usually experience upward price movement in anticipation of the event, and more exponential price increases historically 12 to 18 months after the halving occurs.
So yes, of course, we realize this is a very, very bullish incoming catalyst for Bitcoin that only happens about every 4 years. But also to reiterate how much of an extreme hedge Bitcoin is, take a look at this. Now, to close out the video and tell you that I added more Bitcoin, especially coming up to this halving. I think it's a long-term investment as well as a long-term hedge. So does somebody with a very popular opinion, Joe Rogan.
I mean, the real fascinating crypto is Bitcoin. To me, I mean, that's the one that I think has the most likely possibility of becoming a universal viable currency. And it's, you know, it's limited in the amount that there can be. It's, you know, people mine it with their own computer. It's like, that to me is very fascinating. And I love the fact that it's been implemented. And that at least some, like I've had Andreas Antonopoulos on the podcast, and when he talks about it, he's living it. He's spending all of his money. Everything he gets paid is in Bitcoin. He pays his rent in Bitcoin. Everything he does is in Bitcoin.
Now, there are 5 phases of the Bitcoin halving and how the crypto market actually reacts. So is it the time to get in? Because some could make the argument that Bitcoin is expensive. And a fun fact to back this up would be to show you guys the first website that went live 14 years ago where you could purchase Bitcoin for $1 US and in return receive 1,309 Bitcoins, basically making you a millionaire, if not billionaire. Now, according to this tweet by Rect Capital on Twitter, there are 5 phases of the Bitcoin halving. Number 1, the pre-halving period. If a deeper retrace is going to occur, it will likely be over the next 140 days or so. You can see here in the orange, based off of the cycles that he has drawn out, Bitcoin could be due for a retrace or retest on that trend line right around 20K, which is a 30% drop from the current prices. Number 2, you have a pre-halving rally. Right before the halving, in fact 60 days before, a pre-halving rally tends to occur, which you can see right here in the light blue, scaling back up to the prices where it's currently trading at. So whether this is true or not, I would not condone trying to guess the price action. I think that Bitcoin is just a long-term investment in general, and the fact that it has a fixed supply that is decreasing compared to, let's say, the US dollar where they just print as much as they want, seems like the better investment. Number 3, 4, 5 are made up of a pre-halving retrace, a reaccumulation, and then a parabolic uptrend, which shows that no matter the price action that happens over the next few months, in fact over the next year and a half, Bitcoin is likely to scale even higher. These are the 5 phases of Bitcoin, and I want to say from a personal standpoint, see my stock portfolio do this. The first time I've invested in Bitcoin, maybe I'm just lucky, I'm already up a much safer amount than I would be whether I invested it into the overall stock market or a specific ticker. It's actually a crazy thing to watch happen. Plus, it trades all day long, trades on weekends, so on and so forth. So yeah, it's cool to watch, especially once you accumulate it. Overall, guys, do let me know if you're buying Bitcoin in the comments down below, what you think of Bitcoin, or do you think crypto is just one big scam?